The gold price spiked today on Wednesday, March 21st, 2018, after the Federal Reserve announced a rate hike. So the gold price is up almost $21 today, around 1.5%, give or take. Pretty nice spike here. I have the Kitco chart up for intraday. So, the gold price, despite some corrections the last couple weeks, when it was heading back towards the lower end of 1300, it had a big spike up today in spite of interest rate increases. We may be past that 1974 to 1976 bear market territory that a lot of people, a lot of gold experts, including myself, thought we've been in for years. After the gold price went up, I believe, 11 straight years in a row, and then it had a nasty correction in a paper bear market for the last 7 years or so, we may be totally out of that, because despite interest rate increases, the gold price is actually showing strength. So this is a Kitco technical analysis chart. This is a weekly chart. And so this guy's article is from Jim Wyckoff. Not that familiar with him, but according to his technical analysis, if the gold price can get above overhead resistance levels at, $1,377.50, he thinks that in a matter of months, the gold price could be at $1,500 an ounce or even $1,600 an ounce. Very, very interesting. That would definitely, if we got those gold prices in a short amount of time, that would definitely end the paper bear market. And so, another thing I wanted to show in this short little video is, despite the Federal Reserve announcing today, the new Fed Chairman Jerome Powell today announcing a new interest rate increase, look at the dollar index. It did not go up. It had a little brief spiking period, but this is the one-day chart of the dollar index, and it was actually around 90 before the announcement, and it's going lower. It's below 90. Very interesting. What do you guys think about this? Do you think then it's time for the plunge protection team or exchange stabilization fund or any of these other groups that maybe monitor the dollar? Or do you think maybe this is because then that President Trump and Steve Mnuchin, his Treasury Secretary, want a weak dollar? And so despite interest rate increases, President Trump and Steve Mnuchin, they believe in mercantilism. They want a weak dollar to boost exports, and they don't care about any inflation. Devalued weak dollar would create any stagflation that would be created. So get your guys' thoughts on that in the comment section. Very interesting, though, that correlation, which has held true for many years in the past with interest rate increases and a strengthening dollar, that correlation does not seem to be working right now. And we'll have to see if that correlation holds true, because we've had interest rate increases now, guys, really since the end of 2015. They haven't been a lot of them per se. They've been, a little bit. Quarter point hikes, a little bit. But, every time these interest rate increases have not stopped the dollar index from being in a bear market, basically, over a year now. So very, very interesting. Last thing I wanted to show here, and this adds my point about the historical analysis. And so, during the late 1970s, Paul Volcker, and he was trying to stop inflation, right? So he was raising rates, and the gold bear market, paper bear market, was during 1974 and 1976. And so at the end of, in 1976, the gold price went from around $130 an ounce here, as you can see on the charts. It dropped down a little bit below 110, and that was basically the bottom. So if you bought around September of 1976, you got basically the absolute bottom, or one of the absolute bottoms in 1976 for the gold price. Anyone who says that there's no historical precedent for gold to go up during interest rate increases, that's bad for gold, has not looked at history. They have not. And so Paul Volcker was raising interest rates throughout this time. I believe he raised interest rates at 19%, 18 or 19%, very, very high levels. And the gold price, which broke, and the rules were changed on the Hunt brothers and the silver market. There was a lot of market manipulation to prevent the gold price from going higher. I believe the gold price capped out at around 850 or so, approximately. My point about all this is that there is historical precedent for the gold price starting to go higher despite interest rate increases. So the talking heads or other gold bears out there who say that raising interest rates will break the gold price and knock the gold price back down to 1,000 or lower, they haven't observed financial history very well. And the other point I wanted to bring up with Paul Volcker is Paul Volcker actually admitted later, after he was Federal Reserve Chairman, in his memoirs, he said that he thought raising the interest rates would break the gold price and that it didn't. Raising interest rates actually increased inflationary expectations. And Paul Volcker said in his own memoirs, and I really respect Paul Volcker. I think, he did not pander to Wall Street like Greenspan and other Fed chairmen. He tried to give them tough love, and people on Wall Street hated him. But Paul Volcker did admit that he should have manipulated the gold price and should not have allowed it to go basically parabolic from around lows of $110 per ounce to around $800, $850 an ounce in only a few years. He said he should have manipulated it and not have allowed that. So obviously I think, and you guys know this as well, and many of my listeners believe in the well-documented evidence of paper gold price manipulation and paper silver price manipulation from Gold Antitrust Action Committee and GATA, that the gold price is very heavily manipulated now, and the silver price is very heavily manipulated now too. So just very interesting that there's an argument to be made, and we probably need to see gold break that overhead resistance level, that the paper gold bear market is probably over. That despite these interest rate increases, which many of the gold bears and many people who hate gold would say would break the gold price, it's not breaking the gold price. It's also not strengthening the dollar. So hopefully you guys enjoy the short little video. I'm going to ask Lynette Zhang tomorrow, hopefully about similar topics like this, and same thing for Daniel Lacalle. We'll get their thoughts and views on this. I'm booking other interesting guests. I just booked Nomi Prinz to come on in the next couple weeks to talk about her new book, Collusion Between the Central Banks. And it looks like David McElvaney will also be on again in the near future. Okay, guys, that's it for now. Bye. Do you work out routinely and eat healthy almost all the time? If you eat paleo or vegan or work out routinely, you may be eligible to save up to 33% off on your life insurance thanks to Health IQ. Health IQ is a venture capital-backed, big data technology life insurance company that offers customers life insurance at special rates by using the latest technologies. For more information, please go to healthiq.com/WS4MS. That's healthiq.com/WS4MS. Please like this video, share it with friends and family, and don't forget to subscribe to the Wall Street from Main Street YouTube channel if you have not already done so. We're closing in on the 20,000 YouTube channel subscriber milestone, despite YouTube censorship, and hopefully we'll be able to get to 30,000 or even 40,000 YouTube channel subscribers quickly if YouTube doesn't shut down the channel. If YouTube does shut down this channel, remember to also sign up for the Wall Street from Main Street email list that's on the wallstreetfrommainstreet.com website, and will tell you where the videos are going to be uploaded instead of YouTube. Also, if you really like the content and you decide that you want to give a one-time donation, you can go to the wallstreetfrommainstreet.com website where there's different options for you to do so. Or you can become a Patreon contributor. Thanks for listening, and I look forward to providing you guys with some of the best information, analysis, and financial education available out there for free or paid.